Good morning and welcome to another edition of the OFX Currency Corner. We saw strong gains for the Australian dollar last week, edging through that 77 handle and touching three-week highs above 78 at 78.12. Now the reason behind those gains was largely a softening in expectations of trade protectionism escalating, and comments from President Xi Jinping went a long way to easing those tensions between the US and China. However, can we sustain those risk appetite gains is the major question, and of course the escalation in conflicts in the Middle East and the US's military action in Syria over the weekend has brought into question geopolitical concerns as well that have weighed on those gains and ensured that we're holding on to a tight trading band between 77.40 and 78 US cents. Looking forward, can we sustain these gains and see a push through this current resistance handle? While these gains have been largely driven by higher oil prices and a slight renewal in risk appetite, there is questions as to whether we can sustain those. The patient central bank approach that we saw proffered by the RBA at the end of last week, along with subdued inflation and wage growth numbers here locally, and couple that with a sustained level of high household debt and a transitory uptick in these commodity prices, suggests that perhaps the long-term gains for the Australian dollar will be largely muted, and we will see a correction throughout the middle of the year back towards those levels around 76, 77 US cents, moving into perhaps 74 cents towards the end of the year as the US Federal Reserve looks to continue raising rates and we begin to see that yield gap widen. We'll be looking ahead this week to inflation data on Thursday and the RBA minutes today for some more macroeconomic direction, but of course if you would like any further analysis, don't hesitate in contacting our dealing teams.